Welcome to a society shrouded in secret, where a small group of people control unfathomable wealth and where the general public is unaware of the rules governing money. We shall reveal the mysteries that the wealthy don't want you to know in this enlightening documentary. Prepare to learn the secrets that can change your financial destiny as we explore the core of financial knowledge. I'll be your mentor as you pursue financial independence. Therefore, relax and prepare to learn about the money rules the rich don't want you to know. Because knowledge really is power in this world. Join our financial revolution. Like and subscribe now and take control of your wealth. Rule 1. Compound interest. Compound interest is the first rule on our path to financial enlightenment since it is a notion with enormous power. It is frequently called the eighth wonder of the world, and with good reason. Compound interest has the power to alter the way you manage your money. Imagine investing a certain amount of money and seeing interest accumulate over time. Compound interest doesn't end there, though, which is what makes it special. Additionally, your earnings produce earnings. In other words, the money you spend generates additional income. It's an exponentially growing circle of wealth production. Compound interest is like sowing a financial seed, to put it simply. With time, that seed develops into a money tree that bears fruit, and those fruits produce additional seeds. Your money tree will grow larger the earlier you begin planting. Let me give you a concrete illustration. Meet John, who began making $1,000 annual investments at the age of 25. He had more than $1 million in his possession by the time he was 65. Jane, who didn't start until she was 35, needed to invest more than twice as much every year to accomplish the same million-dollar target. That is the power of starting early and utilizing compound interest's magic. You might be unsure about how to put the idea into practice in your own life now that you understand it. We'll delve deeper into useful tactics for making the most of compound interest in forthcoming episodes. Though it's never too late to start, your cash harvest will be higher if you start earlier. Rule 2. Multiple streams of income. We reach Rule 2, or the idea of having numerous streams of income, as we continue on our trip through the world of financial wisdom. This principle is a cornerstone of monetary success and a tactic the wealthy use to create and protect their fortune. Suppose that your income were a river. That river originates from a single source for the majority of people, your work. However, the wealthy are aware that depending only on one source of income is dangerous. What if the stream stops flowing? They diversify their revenue sources to safeguard their financial future. Investments, side enterprises, rental properties, royalties, and other revenue sources are some examples of these supplementary streams. Your river of revenue grows wider and more robust as each stream adds its own current to it. Let's hear the experiences of those that accepted this idea. For instance, Sarah held a regular job in addition to investing in stocks and collecting rent from a rental property. While her career was in jeopardy during lean economic times, her multiple sources of income offered a safety net. The takeaway is simple. By diversifying your sources of income, you can hasten your progress toward financial independence while simultaneously increasing your financial security. It entails building a network of financial assistance and lowering dependency on a single wage. Rule 3. Asset allocation. The third rule on the road to financial mastery is asset allocation. Consider your financial portfolio to be a healthy meal. You need a wide mix of assets to ensure your financial security, just as you need a variety of nutrients for optimum health. The art of asset allocation involves dividing up your investments among various asset classes, including stocks, bonds, real estate, and more. It's important to spread your financial and emotional risks. You can minimize risk while maximizing earnings by diversifying. Let's examine a case in point. Mark put all of his savings into one stock in the hopes of making a lot of money. Mark's fortunes unfortunately suffered due to the erratic nature of the stock market. Sarah, on the other hand, spread her money throughout equities, bonds, and real estate. She had stability because another market picked up the slack when the first one underperformed. The importance of asset allocation has long been recognized by the wealthy. To safeguard and increase their money, they carefully balance risk and return. They protect their financial future from market swings by adhering to this rule. However, asset allocation isn't merely a luxury for the rich. It's a tactic that everyone can use. You can work toward financial security and progress by learning to balance your investments correctly. Rule 4. Tax efficiency. As we continue on our path through the world of financial knowledge, we reach Rule 4. Tax efficiency. It's not just for accountants to understand the tax code. It's an essential skill for creating and protecting your wealth. One of the largest drains on your financial resources can be taxes. Rich people have perfected the skill of lawfully reducing their tax liability, allowing them to keep more of their hard-earned money. Tax efficiency is how this is accomplished. Think about the following instance. Two people both have the same income. One doesn't pay much attention to tax preparation, while the other uses tax-advantaged accounts, credits, and deductions wisely. After taxes, the latter has much more money in their pocket. Let's hear from people who have successfully used tax efficiency. For instance, Susan set up her investments in a way that would benefit from tax benefits. She reduced her tax liability throughout the years, which allowed her to legally preserve a significant sum of money. The wealthy are aware that what matters is how much you keep, not how much you create. You can make sure you're not paying more in taxes than required by being familiar with the principles of tax efficiency. Rule 5. Debt management. We come across Rule 5. Debt management as we travel the road to financial empowerment. Debt is both a constructive force and a devastating tool. For your financial security, it is imperative that you know how to use it. Student loans, credit card debt, mortgages, and other types of debt are just a few examples. Making the distinction between good and bad debt is crucial. Debt that is used wisely, such as that used to finance an education or buy an asset with rental income, can help you accumulate wealth. On the other side, bad debt frequently has exorbitant interest rates and no room for expansion. Let's look at an illustration. Sarah took out school debts to obtain a degree that prepared her for a lucrative position. In this situation, the student's debt for education is a good kind of debt because it represents an investment in her future. Mark, on the other hand, used his credit cards excessively and racked up debt, severely depleting his resources. You'll hear tales of people who successfully handled their debt as we travel along. They changed their financial situation by identifying good and bad debt and putting plans in place to get rid of the latter. The wealthy are aware that debt can serve as a springboard to wealth if it is handled carefully. They take advantage of leverage, but they also know when to get rid of unnecessary debt. By mastering this rule, you too can take control of your financial destiny. Rule 6. Long-term thinking. We come to Rule 6. Long-term thinking as we continue on our journey through financial knowledge. This rule might be the hardest to live by in an age of instant gratification, but it's also the one that's most important for achieving financial success. The wealthy are experts at postponing gratification. They are aware that accumulating riches is a process rather than a race. Making judgments today that will help you in the far future is what is meant by long-term thinking. Consider two pals, Alex and Chris, as an example. While Chris devotes a percentage of their income to long-term investments and savings, Alex constantly pursues short-term gains and spends each paycheck as it is received. While Alex experiences persistent financial uncertainty over time, Chris's wealth continually increases. You'll meet people on our journey who have embraced long-term thinking. They gave up today in order to guarantee a better tomorrow. These are the ones who get that cultivating your financial garden carefully is the key to achieving actual financial freedom. You'll meet people on our journey who have embraced long-term thinking. They gave up today in order to guarantee a better tomorrow. These are the ones who get that cultivating your financial garden carefully is the key to achieving actual financial freedom. Rule 7. Financial education. We reach Rule 7. Financial education as we continue our journey into the realm of financial enlightenment. In the world of money, education is the key that opens the door to financial freedom. It is frequently said that knowledge is power. Understanding money is only one aspect of financial education. Acquiring the knowledge and skills necessary to make wise financial decisions is another. The wealthy understand that investing in their own personal development through ongoing education in the field of finance. Take Mike and Lisa as two examples. Mike never attempted to increase his financial literacy because he believed he already understood enough. Lisa, on the other hand, invested time in learning about finances by reading books, going to seminars, and consulting specialists. Lisa made increasingly profitable and wiser financial decisions over time. We'll take you on a journey that introduces you to people who committed to financial education and changed their financial outlook. They were aware of the abundance of resources available and took action to become more independent. The wealthy are aware that learning about money is a lifelong process. It involves constantly improving your financial savvy, adjusting to shifting conditions, and taking reasoned decisions. Adopting this rule will provide you the tools you need to successfully navigate the complicated world of money. The 7 guidelines that outline the way to financial empowerment have finally been revealed. But in order to comprehend these ideas, we must be aware of a fact that is frequently overlooked: the richest people's secrets. The wealthy frequently work in secret and carefully guard their methods and strategies. They don't want the general public to know how they have accumulated wealth and established their legacies. But now is the right time to spill some of these secrets. We'll look at the strategies they use to safeguard their assets and reduce risks. We'll examine their networks, way of thinking, and the expertly designed frameworks that allow them to transmit wealth from one generation to the next. You'll hear tales of people who have caught a peak of the affluent lifestyle as we go. Their lives have been completely affected as a result of discovering the financial techniques and methods employed by the wealthy. Although we can't tell you everything, we can give you a path to financial empowerment.